Good morning. We are live. This is the Deep Dive with Keeping Current Matters. My name is Kate Rezebeck. Thank you so much for being here this morning. It is always such an honor to start out every week with the most important topic in the housing market. And I'm really thrilled to be here with you today. We're going to be talking about the 2025 housing market forecast, a real early look at what's ahead for next year. And I cannot wait to share that with you today. So as always, make sure you're tagging anyone who you want to share this deep dive with. Share it with your friends, share it with your coworkers. This is a great opportunity to get the message out there on what's ahead for the rest of next year, what the experts are saying. And of course, as always, we have professional visuals to share with you. So if you're a KCM member, you're going to be able to download these slides in the member area. And if you're new to KCM, welcome. Thank you for joining us. You can go to trykcm.com to download these slides as well and have these right at your fingertips, because when you have professional visuals to be able to explain to your clients what's happening, that's the game changer. We always say that there's a really big difference between being able to tell someone what's happening and to show them. And that's what we want you to be able to have as you walk away today. We're going to be talking about the 2025 housing market forecast. Really excited to share that with you. But remember, we always say this. Remember, most agents know what's happening. It's the good agents that understand what's happening and only great agents that can explain what's happening. And I hope that as you walk away today with these visuals in hand, that you're able to explain to your clients what the experts are saying about next year. There's a lot of exciting things happening, and we're going to be talking about mortgage rates, sales, and prices. We've heard a lot of excitement around mortgage rates, even over the past few days. So really can't wait to talk with you today about what we're seeing coming up in the year ahead, and most importantly, how to get that message out to your clients. So lots of good stuff on the horizon. No doubt, I think as we kick this off today, we can say that this has been a challenging couple of years in the housing market. Absolutely. We've seen high prices, high mortgage rates. It's been hard to find a home for a lot of people. And oh, by the way, you've had the NAR settlement looming, changes to the industry that have all been kind of swirling throughout the business, throughout what you do every day. But what I love about what we're going to talk about today is signs of optimism and what's around the corner. So we're bringing you the latest forecasts that we have. And I think it's time to jump right in and talk about that. So let's go ahead and get started. I'm going to kick you off with a quote from Ralph McLaughlin. He is at realtor.com. And he says, "We expect the economy to land softly and housing inventory to continue to recover. This should put downward pressure on mortgage rates this fall and winter and will set the stage for a much better season for home buyers in 2025. That is fantastic news. That's exactly what we've been hoping for. Inventories starting to rise. We talked a moment ago about downward pressure on mortgage rates. We're going to get into that a little bit today. And definitely a better opportunity for home buyers, more moderate prices. We're going to see some different things in the housing market next year. And as we continue to talk about what's ahead for the year, we're going to continue to bring you updated forecasts because this is always changing. And we certainly wanted to take a moment to give you a very early look at it today because there's a lot of good stuff ahead. So I want to start with mortgage rates. That's been the big buzz, especially over the past few days. We saw mortgage rates hit their lowest level in 19 months last week. I think the lowest we saw was about 6.11% for Mortgage News Daily. But there's a lot of things happening in the economy right now that are starting to trigger mortgage rates coming down. We've seen inflation easing. We've seen the job market cooling. We know that the Federal Reserve has indicated that they're planning to start their cuts to the federal funds rate this week. So all of these things coming together are putting downward pressure on mortgage rates. And we actually did a deep dive on what to expect at the next Fed meeting a few weeks ago. I think it was on August 26th. And if you haven't watched that, go back and watch it again, because it's a lot of context for why all these things are coming together. But I think if we take a look at this next quote, that starts to set the stage for what's ahead. This is from Greg McBride at Bankrate, and it says, "Fed interest rate cuts in general will bring about lower mortgage rates, which is a definite boost to the housing market, but it won't happen overnight. So what does all that mean? It means we're seeing the economic indicators that are showing mortgage rates starting to come down. We know the Federal Reserve is meeting this week. They're expected to start these rate cuts to the federal funds rate that will have that downward impact on mortgage rates. Now, remember, the Federal Reserve does not set mortgage rates, but their actions reflect what's happening in the broader economy, and all those economic signals are coming together that show mortgage rates are starting to ease. They're starting to come down off that peak that we saw this year. And, in April, it was 7.5%, and we're down in the low sixes right now. So we're seeing that progression, and it's expected to continue into next year. Now, a lot of that is starting to be baked in right now. So we're seeing that kind of priced in ahead of this Federal Reserve meeting. We don't know what will happen. The game could change by any means. It's going to be a volatile market, no doubt. But the indications are clear that the Federal Reserve should start cutting the federal funds rate this week, and that will continue a series of potential rate cuts, maybe 2, maybe 3 this year, several more next year, that should bring mortgage rates down as all these things come together. Now, what I'm going to show you next is the latest projections that we have from some of the top experts on what they do project for mortgage rates over the next year. Now, some of these were updated in the end of August, and some were updated at the end of last week. So I want to walk you through that so you can see the latest that we have. These are the 2025 mortgage rate projections from Fannie Mae, MBA, and Wells Fargo. And I highlighted the Wells Fargo one because that is the one that came out late last week as we were seeing all these indicators come together. And they're showing that mortgage rates should come into the high fives, maybe even the mid fives by the end of next year. Now, remember, mortgage rates are the hardest piece to project in the housing market. Anybody's guess out there, but all the economic indicators are showing a slow, small, gradual decline. And that's fantastic news for your clients who have maybe been sitting on the sidelines, who are waiting for mortgage rates to come down. Fannie Mae and MBA, as I said, updated theirs late in August. We're continuing to watch this to see what the next projections are going to look like. We anticipate that they might be a little lower as well, but we're starting to see those signs of optimism. We know that high mortgage rates really slowed down the housing market over the past couple of years, but we should see more buyers eager to hop in, more sellers feeling a little less rate locked, maybe more willing to sell as mortgage rates come down. And that's going to bode really well for 2025. And I want to pause here for a moment because for those of you who have followed along with us for years and years, you remember Steve Harney, who was a huge icon in our industry. We lost Steve suddenly in March of this year. But at the beginning of this year, just before he passed, he was so adamant that we were going to see mortgage rates in the high fives by the end of this year. And he kept saying even 5.99% counts. And I know that Steve is smiling and looking down at us and excited to see these projections and excited to see the movement, because what he would be saying right now is we've got work to do. We got to get out there. We got to get that message out there. And I think Steve would be really happy to see where the projections are headed. And, we are knocking on that door of the fives. And I think that's really something that we should all take with us, and the motivation that we need to get out there and get this message out there, talk about it, show the visuals, make sure your clients know how you can help them in this moment, because we're really in a great place. So as we continue to move forward, Steve was a big fan of visuals. He said a picture said 1,000 words, and this is a great visual that you can share with your clients to get that message out there. This is mortgage rates going all the way back to 2018. And that orange line kind of shows where we had that historic low between 2020 and 2021. You can see that big spike up that really kind of slowed down the activity in the housing market. And then those dotted lines are the projections on what's ahead, where mortgage rates are projected to go based on the latest information we have from the experts right now. So yes, it's going to be volatile. It's not going to be a straight downward line. We're going to see a lot of activity, but mortgage rates coming down should help with affordability, should help your clients who need to jump back into the market, who have maybe been sitting on the sidelines. And there is going to be a big mindset shift when we start to see rates in the fives. So very, very optimistic for what's ahead. We will keep you posted on what's happening with mortgage rates. But as we start to see rates come down, what does that mean? It means lower financing costs will likely boost demand by pulling affordability crunch buyers off the sidelines. So talk to your clients, show them what's happening, be able to explain how all of these factors come together and how it can boost their purchasing power. We have a blog out today that I want you to go and take a look at on keepingcurrentmatters.com. And what it shows is how much a buyer's purchasing power, sorry, this blog's coming out tomorrow, how much a buyer's purchasing power is changing. You know, the median priced home, if they're purchasing a $400,000 home, that monthly mortgage payment is coming down by $375 or more. So really big news based on if someone bought a house last April or if they're ready to buy now. And we want to carry that momentum into next year. Because it's really going to make a lot of difference for those buyers who are waiting and who are eager to purchase. So with more buyers coming back into the market, will we see a massive flood? No, probably not. We will definitely see more activity, but more activity means more transactions. So as we look ahead to 2025, this is the projection, that blue bar for total home sales in 2025, and a little bit more than this year and last year, projected to be around 5.5 million home sales. The current pace for 2024, as you can see, is about 4.7 million. But we're watching that number come up as mortgage rates are ticking down. So it's certainly going to create more activity. And that's fantastic news for the housing market. And I think if you want to break it down and look at what some of the experts are saying specifically about 2025, anywhere from 5.2 to 5.7 million is the projection right now. So averages out to about 5.5 million home sales next year. Is that enough? No, we'd all like to see more, but my big question to you is how many of those sales are going to be yours? If you're the expert, if you're the professional, if you're out there talking to your clients, making sure they know what's happening, they know how to navigate this market, they have you by their side. You have an impact on that 5.4 million, and you can take as many of those sales as you want. That is about the work that you do now to be that trusted expert and to help your clients succeed in the year ahead. Now, with increased activity expected in the housing market, what does that mean for prices? Well, we still have more buyers than we have homes available. We're starting to see inventory rise. That's creating more options for buyers. So that's definitely good news. But we're going to see more moderate home price appreciation. And if we look at it nationally, we're going to talk about locally in just a moment. But nationally, we're expected to have about 2.5% appreciation throughout the country next year. Now, some on the higher end, Wells Fargo, Goldman Sachs, some of those bigger banks saying maybe 4.3, 4.4%, and some of the others maybe a little bit more flat. But if you average them all out, much more moderate home price appreciation, returning to those more normal levels, which is going to improve affordability, especially as mortgage rates come down. That's pretty much what we're looking at right now. Now, I mentioned local home price appreciation a moment ago, and I think it's important to remember that every market is very different. And as we talk about home price appreciation, we need to talk about, that's based on supply and demand in each individual market. We're seeing some markets where inventory is rising above those 2019 levels. It's coming back to those pre-pandemic levels. So some markets are going to see appreciation much more rapidly than others. Some might see slight declines as well. It's truly going to vary more than ever, market by market. And I think this quote from Lance Lambert says it well. Even if the average national home price forecast for 2025 is correct, it's possible that some regional housing markets could see mild home price declines, while some markets could still see elevated appreciation. That has been, after all, the case this year. So some markets are still very firmly in a seller's market. We've talked a lot about how the housing market is moving overall more towards a balanced market. So we're seeing more inventory and options for buyers, but it is going to vary locally for sure. So using your KCM data to make sure that you have local data paired with what your clients are seeing in the national news, because all of these national market updates are what your clients are seeing every time they open their social media feed, they go online. It's all out there. So you want to be able to speak to both and to show what's happening with your professional visuals, both locally and nationally. So as we think ahead to 2025, I want to wrap with one more quote for you. You know, we're seeing the economic indicators we're looking for. We're seeing mortgage rates coming down. We anticipate that home sales are going to increase. We'll have more moderate appreciation. And I think Selma Hepp from CoreLogic says it very well. Currently, economic projections for 2025 are also positive, which points to a positive outlook for the housing market. So thank you, as always, for being here with us for the deep dive. Lots to talk about with your clients. Share these visuals, get this information out there. We have some great visuals for you for KCM members. We have early forecasts available in our member area. If you want to share these on social, if you want to record videos about them, we have all that good stuff for you. Check it out. Do the work, share it, be the professional, be the expert. And we will be back here for you again next week. So have a fantastic week. And thank you so much for joining us.